Hi everybody, it's Peter Schiff. It's Monday, April 18th, 2011. Well, not quite a date that will live in infamy, but a significant day nonetheless. This marked the first day that S&P actually expressed some concern regarding the fiscal outlook for the U.S. Treasury and, by extension, its credit rating on U.S. sovereign debt. Now, what S&P did today was place the AAA credit rating of the United States on negative watch. Prior to today, believe it or not, the watch had been stable, and the U.S. government enjoyed a AAA credit rating. Now, that AAA credit rating has not been reduced despite S&P's legitimate concerns that Washington is not going to get its fiscal house in order, that there is no progress being made whatsoever to address our medium to long-term fiscal imbalances, namely the budget deficits and national debt. And because Congress is reluctant to do anything about it, Standard & Poor's is now concerned enough that they are putting a negative outlook on their AAA credit rating. First of all, what took them so long? I mean, the absolute last time that S&P should have put negative watch on that AAA rating would have been George Bush's first term in office. Certainly by the end of his first term, the AAA rating should have been lost at that time. There should have been many more downgrades of U.S. sovereign credit since that time. I mean, the irony of it is AAA is the highest rating you could get. That should be reserved for nations that don't even have budget deficits. There should be total clarity with respect to the fiscal outlook. There should be zero probability of default, and more importantly, zero probability of inflation. Because when it comes to sovereign debt, there's two ways that the issuer can default. One is not paying, and the other is paying with money of diminished purchasing power. Either way, the losses are real to the creditors, and so creditors have to be concerned when it comes to lending to sovereigns. Are you going to get paid back? And if you do get paid back, what's the money going to buy? And given the legitimate concerns that S&P already stated that they have, based on what is the U.S. government still a AAA rating. After all, if they have some concerns, they should already have a downgrade. I mean, what's the point of saying that you're worried but leaving the AAA rating intact? I mean, when are they finally going to downgrade the debt to AA plus? When they declare bankruptcy? When there already is runaway inflation? You see, what they should do is downgrade it right now. See, they said that, well, we're not sure if Congress is going to get its act together over the next couple of years, so we're going to wait and see. But by the time they're 100% certain that the government's going to do nothing about the deficit, well, what's the point of downgrading it then? The fact of the matter is they have to downgrade it now. I mean, think about it from the point of view of a stock analyst. You know, think of a AAA rating as a strong buy. And let's say an analyst is covering a particular company, and he thinks there's a good chance that they might go bankrupt. Not a 100% chance, but he doesn't like the direction that management is going. He thinks they've got too much debt, and he thinks if they don't change, that there's a good chance that the company could go bankrupt. Now, would that analyst leave a strong buy on the stock because, well, there's still a chance that they won't go bankrupt? How can he do that? And then what, if they do go bankrupt, he's going to take it from strong buy to accumulate? I mean, the whole idea is the minute you think that there's a possibility that the company might go bankrupt, how can you recommend it? I mean, at the most, maybe you reduce it to hold. For people who already have it, let's hold and wait and see. Let's not put new money in. Let's see if they get their situation straightened out. And then maybe, when you know that they've passed the point where bankruptcy is a possibility, then maybe you raise it back up to a buy. That's what S&P should be doing right now, given the fact that they are concerned that Congress may not do the right thing. And they probably won't. That's where the smart money would bet that they're not going to act in advance of a crisis. So why don't they just downgrade the U.S. government right now? Because they can always bring it back up to AAA if they pass meaningful budget reform and debt reduction. You can always bring it back up. But how can you leave it at a AAA rating today when you have legitimate concerns that we're not going to get our fiscal house in order? I mean, that shows how pure political nonsense the AAA rating is. And in fact, some people might argue that, oh, this is going to be a wake-up call to Congress. Now that S&P has done this, they're going to act because they see that their AAA rating is in jeopardy. I think it's going to have the opposite effect.
I think it's going to have the impact, hey, look at all the stuff we've done wrong. We got massive deficits as far as the eye can see. We've done nothing to address these imbalances. We haven't made any of the hard choices, and we're still AAA. What do we got to lose? Let's go even deeper into debt. You know, this whole thing is a complete farce. And I think part of the problem is there's too much of a cozy relationship between, you know, S&P and the U.S. government. After all, there are only a few companies that are even licensed to be able to rate bonds. S&P is one of the few, and so I think they have this cozy relationship. I also think they have this relationship with Wall Street. I think they're afraid to tell the truth and to actually downgrade U.S. sovereign credit, because, of course, once they downgrade treasuries, it's like dominoes, because all the other bonds are queued off with a treasury rating. And once you bring treasuries down, then you got to bring everything else down, especially if you're doing it for currency risk and not default risk, which is obviously the main reason. Because a lot of people are going to think this whole thing is absurd. There's no way the U.S. government is going to default. Now, while I don't think there's no way that they're going to default, I do think that the odds are that they won't, but they'll do something even worse. They'll print. And the problem is if the U.S. government is going to print to pay off its debts, then it not only wipes out the holders of treasuries, but it wipes out holders of any dollar-denominated debt instrument, whether it's a municipal bond, whether it's a corporate bond. So the minute S&P downgrades the U.S. Treasury, they can't stop there. They got to go through the whole chain, and they don't want to do that. And also, I thought maybe there's some kind of quid pro quo going on, because if you ever wonder how come nobody at the rating agencies got prosecuted, either criminally or civilly, for any of these ratings that they assigned on these mortgages. Many of the mortgages that S&P rated investment grade, some of them actually were rated AAA right up until the point where they were worthless. How come there's nothing happening to the rating agencies? Maybe this is the quid pro quo. U.S. Treasury maintains its AAA rating, and it's business as usual over at the rating agencies. I don't have any proof of that, but it certainly looks a bit suspicious to me. Now, the other thing that I think is kind of more amazing than the fact that S&P put the U.S. Treasury on negative watch today is that anybody cared. I mean, should this really be news to anybody? I mean, anybody who didn't know this? I mean, come on, yet the market sold off, the stock market sold off anyway, that this was some kind of surprise. But what kind of surprised me was the muted reaction in other markets. The bond market really didn't go down at all. I mean, you would have thought that maybe if there was going to be a reaction to be in the bond market. And the dollar actually strengthened today. I mean, except against the yen, it went up against the euro. Why? I mean, if we're putting the credit rate downgrade on U.S. Treasuries, why isn't that negative for the dollar? Gold actually made a new all-time record high today. Silver continued its run of new 31-year highs. Yet despite these record highs, gold and silver stocks continued to correct. They've been falling for over a week, despite the fact that gold and silver prices keep moving higher, which to me, for those of you who think there's a precious metals bubble, it certainly doesn't look too bubblicious to me when you can't even get a decent rally in the mining stocks given the surge in the underlying precious metals. So I think most of the people that looked at this negative, I think took it with a grain of salt, because after all, they're still AAA. And maybe they're looking at, look, this is just a talk. They're not actually going to do anything about downgrading it. And again, I think that's what Washington is. I think this is not going to scare Washington. Maybe some people bought the dollar based on that hey, this is going to force their hand. This is going to make Congress act responsible to make sure that S&P doesn't go the next step and downgrade the U.S. Treasury. And even if they did downgrade it, I mean, I don't think Congress cares whether they're AAA or AA plus. I mean, they're not going to bring it down to where it needs to be. They're not going to put it down to junk status, because that's where it should be. And again, everybody out there is saying, oh, we don't have to worry. We've got a printing press, so we're never going to default. But that's exactly why we have to worry even more. It's precisely because the U.S. government does have a printing press that holding U.S. Treasuries are so risky. And it's amazing how few people have actually connected the dots and figured this out. Anyway, that's all from today. I'll be back again in my studio on Friday. I'm here in Bridge with my son skiing for spring break. I hope everybody enjoys the rest of the week, and I will be blogging again soon. Take care.